Big J, what's a good word?
Hey, the
Oracle. Larry
day.
Ellison is a lot richer today than he was yesterday. I mean,
Wow. Yeah. Insane move. I mean, again, a lot of it linked to a couple of big folks, but Oracle was certainly the talk of the town. Obviously, there's some sad news in the after hours, but as
yeah.
far as the markets were concerned today, Oracle ended the day up 36%. What's that make Ellison number two? Pretty
He
or close
was
to the
number
richest guy.
one. Yeah,
Is
he
he?
was number one when the stock was at about $100, and right now in after hours it's at up 89, including regular session and after hours 89.84 is where it is right now. So yeah, he surpassed Elon today to become the world not just in the U.S. the world's richest man, folks.
Right.
We're jumping this right into this, so bear with us here, but it's kind of fun to talk about. He made $100 billion today in the appreciation of the stock between yesterday's after hours and today's normal session. $100 billion.
Incredible.
How do we take our company public?
Well, if only
Please.
we could have a revenue backlog like Oracle had, then yeah, we'd also be very, very happy. But it was,
Yeah.
I mean, it just shows that, people identify one of the top firms in the space, and if you wanted to transition from where you are now to a technology of the future, you're going to lean into folks like Oracle, and
Yeah.
that really just showed, based on the move in the stock, there was a little bit of a short base in it, clearly, just merely because their numbers were in line last quarter. Their numbers were a touch light this quarter. But really, what they said is their expected revenue that they've already booked, right? So these are deals that they have in
Yep.
the pipeline
Yep.
are massive, to the point of a 50+% compounded annual growth rate over the next 4 years. So that's why the stock shot up 36% today, was high as up 40+%, just because the likes of OpenAI, which was mentioned, but there's others that they've truly already booked to build out data center linkage technology, et cetera, for years to come. And that's why the stock was such a moonshot today.
Yeah, it really was. As I discussed on the show yesterday with Corey and Dwight, they didn't have a good quarter that they just reported on. They actually missed expectation on both the earnings per share and the revenue, so the top and the bottom line. But exactly as Jason's talking about, it's what was booked, right? And what was it 1,345% improvement from a year ago or something? That's some staggering 1,000+% improvement. And I don't know, I never used to be this way before you came into my life, so I'm going to blame you. But I look at something like that, and I kind of look at it again. I use the analogy: one eyebrow up and one eyebrow down. Like, you really had that big of one quarter? I mean, how do you? We learn a lot from Dr. Dennis Sanchez, right? He's in there, was in that corporate world, and things like that take a long, long time to book those type of contracts. And for all of them to hit, or I shouldn't say all, but a vast majority of contracts of that size to all hit in one quarter, I
Well,
don't know. It just
it's that they booked
raises some suspicion in my eyes.
a couple deals they had been working on that sort of all came to fruition during
Yeah.
that quarter. And remember, I mean, you guys talk about the rapidity of the adoption, right? And
Yes, of course.
there's some
Technology's
companies
there.
that are, in a spot that they know they have to go do something, and these are big deals. You're going to
Yes.
commit
Oh, yeah.
to a firm like this to
Well,
say, look, again, I'll just make something up. You're John Deere and you have no, sort of technology, AI, artificial intelligence footprint whatsoever. But someone in your technology team is like, look, imagine if, right, we could take this data and get this
kind of what I'm doing to
stuff.
you.
What's that?
Imagine if I said, kind of like our discussion internally.
Yeah, yeah,
Imagine if, yeah,
and
no, it's
that's
every
what
company's having this discussion.
big companies are doing.
Yes.
And someone is saying, look, we're going to either spend the money and potentially be wrong, right? Like
Mm-hmm.
we're going to spend all this money and ultimately see 1/100th of the revenue we think we're going to get, because people are going to be like, great, I don't care that your tractors can all drive themselves. Like
Mm-hmm.
Farmer Joe doesn't give a rat's backside. He just wants to drive it and his kids don't, you know what I mean? Like
Mm-hmm.
there's the technologists that are thinking of things, and then there's sort of the practical users, right? So
Right.
that's
Right.
going to be the hiccup for AI down the
But
road of
let's go
what
back
does
a
it
little
do?
bit.
Yeah.
Again, we weren't even planning on talking about this, but this is a great topic topic. Let's go back a little bit. You and I, we live and eat and breathe these data centers and what they do, and the Amazon Web Services and Microsoft Azure and all these major tech companies that we talk about the cloud and these data centers. Let's take 2 seconds and back up for those that don't know what the heck we're talking about and what's a data center and why are these companies like Oracle just gobbling up data center space or building new ones as we're seeing around the country.
Yeah, I
Like,
mean,
people need to
I'll
understand
keep it
that.
super simple. Going from the two of our brains duct taped together to a million brains duct taped together. And that's what a data center is. It's just a really big, fast super brain that holds lots of information that's added to and appended to, and the faster you can be, the more efficient you can be in sourcing information in one spot. Remember, data takes time to move, right? We've talked about NASDAQ, where they were co-locating New York Stock Exchange. Same thing. The people who had the stuff as close to the exchange made the most money because they could react the fastest, right? Where to have these, you go make a call to Perplexity, ChatGPT, Copilot, whatever one you decide you want to use. Think of all of the data crunching it's doing. We just go, oh, I type in a search and it gives me this back, or I want to create a video of a cat, dressed in Star Wars gear, assassinating mice that look like, they're on the Death Star. Think of what that takes to go create that thing. Think of all the ways to do it and then create a video for you, right? And that's what these data centers are, is the more of them, the more processing speed, the more space they have to store information. There's going to be winners and there are going to be everyone else. I promise you there's not going to be 15 chat GPTs. There'll be little agents where each of us have our own thing that, Sanchez Gaunt can have clients interact with the front end. And we're not doing this tomorrow, but they never have to talk to a person, and it's just all this Q&A on the front end of how do I roll over my IRA or what's my RMD or all those sorts of things that we've pre-programmed all of our knowledge and data into, and it can give them accurate answers. All these companies are going to do it. Well, in order to get that, they need to put it somewhere, right? We're not going to build a server farm in our backyard. It's too expensive. We probably aren't worried about latency. Like, I don't need it, instantaneously, because our
A
clients aren't
nanosecond
going to,
doesn't make a difference to us.
right. Our clients are not going to ping our API and try to pull data and day trade with it, right? But they want to have quick response. And that's why we would just store all of our data in Azure or a data center of Oracle's or something, and then build all the AI, the agent information there, so that you ask us a question, it's all in one place, it spits out an answer. And think of all of the companies out there, big and small, that are going to use this. And that's the bet that Meta and Microsoft and Oracle, who builds a lot of the technology around it, what they're tasked with doing. So it's very exciting. It will be a bubble at some point, but I think it's a very investable space, as we've seen now and for years to come.
And there's a lot of ways, folks, that you can play that. We can't get into any specific names, but there's a real estate investment trust, a REIT, that we deal with, that we have our clients in, that this is one of their largest holdings, or I shouldn't say one of it is a large holding of a diversified real estate portfolio that invest in these data centers, data farms, whatever you want to call them. Because again, this is the wave of the future. You don't hear a lot about industrial or some of the other hot areas of commercial real estate now. Now it's all data centers, right? Who's investing? Because put it this way, folks, a Meta, an Amazon, etc., don't think they're going out and they're buying these data centers, right? They're probably helping fund, if not funding, the whole thing. But what they're doing is they're getting a company like a real estate investment trust to come in and buy that, and then they will turn around and lease that data center from a aforementioned company, right? There's tax advantages. They're not tying up all their capital, and I could go on and on for all the various reasons. But it is a very, very hot area. Like, I agree 100%, Jason. I think this is an area that's going to continue to grow. But it's just one of the ways that you can play, quote, the AI game, right? You don't have to invest into a pure AI company. You can do the infrastructure play. We've spent a lot of time talking about the nuclear power facilities, right? And that's one of the other big challenges of these data centers is how the heck are you going to power them, right? You can't plug into NV Energy. If you're building one here, you can't plug into NV Energy and go, hey, we've got this 500,000 square foot data center with 1 million servers sitting in there. It's not that easy, right? They've got to a lot of times create their own power, and that's why these little nuclear type companies are coming
the
about.
SMEs, you've got names like
SMEs.
Vistra VST that's up 1,000% in the last 5 years, and that's what they do. They're just power generation that are tapped into. They're down in Texas. Guess what's also in Texas? Google and Tesla and all. So it's a new exciting world. And
It is. It is.
the
Love
flip
it.
side is a lot of these things have moved a lot too.
Mm-hmm.
But you just want to keep a close eye on valuation and
Absolutely.
things. So.
And be diversified. Name of the game. All right. Well, we didn't get a chance to tell you what we're going to be talking about today. Got a very exciting topic. Cannot wait to mention that. We'll do that when we come back. Let's turn it over to Jack Saban. He's in the Right Now Traffic Center. Jack, how we do? Welcome back to the Jon Sanchez Show on Newstalk 780 KOH with Jason Gaunt. And first, before we get into business, again, Jason briefly mentioned this at the beginning of the show. Our hearts and prayers and thoughts go out to Charlie Kirk's family and everybody out there. Young, vibrant voice of America, and obviously for Magma and so on and so forth. But just a tragic loss today, being shot down at a university campus of all things. And unfortunately, I'm sure most of you have heard he passed away. And so, yeah, like you said, Jason, just you and I were chatting before the show, just a little bit of a dark cloud over everybody today with that. It's just a tragic scene. There's way too many crazy people out there. Way too many crazy people. All right, let me tell you what we have lined up for you this afternoon. Like I said, I'm very excited about this. Been working hard on this for you, all of you today. Jason and I have. We touched on this on Wednesday, or excuse me, on Monday. Losing track of the days. Touched on this subject on Monday when we were talking about Roth IRAs and things. And we said, you know what? On Wednesday, we're going to do a show that many of you have never probably heard about before. And it's called a Backdoor Roth, right? So remember, folks, Roth IRAs can do a lot of things for you, right? Substantial benefits, tax deferred growth, tax-free withdrawals, no required minimum distribution, or what we call RMDs. But if you're single, here's the problem. If you're single and you have modified adjusted gross income of about $150,000, you no longer can put your money into a Roth IRA. You make too much money, single, 150 or more, can't do a Roth IRA. If you're married and you make more than $236,000, same thing. You can't fund a Roth IRA. So what the heck do you do if you want tax-free withdrawals? Because remember, folks, the benefit of the Roth IRA is as long as you leave that money in for till age 59 and a half or 5 years, whichever is longer, you get to pull out all of your gains 100% tax-free. So think about that for a second. Think about in retirement having a massive nest egg, hopefully for you, that you get to take out and not pay a dime of state, federal, capital gains, zero tax, right? It's a dream for everybody. So, but again, a lot of people make more than the 150 or the 236,000. So there's a workaround, and we call it, again, the Backdoor Roth. So what Jason and I are going to be doing when we come back from the bottom of the hour break is we're going to explain how this works. We're going to get into the benefits, the rules, because like anything, you have to understand the rules, and how you can make this work. We're going to try to get into some pros and cons and different things like that. But Jason, it is probably one of the most powerful strategies, in my opinion, as far as retirement savings is concerned, that I think very few people, that's why I was so excited to do this topic with you. I think very few people even know that exists, but they probably don't know about the funding rules. A lot of people don't. It's not, really well published, but much less how you get around it. And before you answer, I want to bring up a quick story. Those of you folks, if you want to read about this, it's really a phenomenal story. Peter Thiel, right? He was one of the.
I knew you were going to
I was going with that. Yeah, one of the co-founders of PayPal, right? Way back in the day, right? And he's gone on to, he's involved in, he's Mr. Silicon Valley, basically. But way back in the day when PayPal, when it was just an idea, he took this was,
it was $100 million. It was a big number, but
no.
Yes.
Not $100 million.
I think that's how big the account was.
No. It was like $5,000-$10,000. Yeah,
okay.
It was like next to nothing. But the bottom line, he invested his Roth IRA using this backdoor strategy. Used his Roth IRA to buy his initial shares of PayPal, and I'm sure he was given some, etc. Well, that little tiny investment is now worth, I'll look it up during the break to get the exact numbers, but significant sums, probably north of at least $100 million, if not more, all tax deferred, all tax free, right? Again, most people aren't going to do that. But as Jason and I will get into, we'll call it probably in another month or so, we're going to show you a way that you can do the same type of thing. You want to use an IRA to invest into a business? Guess what? We now have the solutions that we're going to be able to help you with. And so this is like a little primer, but you got a lot of things that you're going to really fall in love with as we go through this topic today.
Yeah, I mean, again, we do this for lots of clients. And most of your, hopefully, Ks allow a traditional or Roth option, right? So this is we've filled up that bucket, and now we're looking for other places to invest. You can put infinity. You could make infinity dollars and still contribute to a traditional IRA. And again, we'll get into the logistics. But it's the thought of, how do I make it a Roth? I don't want to pay taxes on in the future. Here's a great way to do it where you can pay the taxes now, which you had to do anyway if you wanted to put it into a traditional because you make too much. And I wouldn't be surprised, John, would it, if they change this rule at some point, just because
they've challenged it a few times,
truly,
but it's
why say there's a max? Do you know what I mean? Like, it's kind of.
I know. Yeah. Well, it's the government's way, right? Yeah. And it was, if I remember right, I think it was probably 2, maybe 3 years ago. Remember, you and I were a little bit panicked, along with other financial advisors, that they were going to do this. Biden administration was trying to close this loophole of the backdoor Roth IRA. And it kind of came down to the 12th hour. And then they just took it off the agenda. I forget if it was the Senate, someone in the Senate or the House that was trying to close it. But yeah, who knows how long it'll remain. It's been around, like I said, for many, many years. And, but the government doesn't like it, folks, because as we're going to share with you in this strategy, they're really not getting their money. They're not getting their tax dollars like they're going to get when you fund a traditional IRA and you pull the money out of, some portion of it or all of it when you retire, and you get to pay, taxable income on that. Roth IRA, when you go to pull that money out in the same scenario, like I said earlier, zero tax on there. So what do you think the government's more favorable on? The traditional where you get to pay tax, or the Roth where you don't? Well, we know the answer to that one. So yeah, it's going to be a fun one. All right, my friend, we touched a lot about Oracle in the first segment. What else on your mind today in regards to today's market action? Kind of sloppy on the Dow side of things. Apple's under pressure. No follow through from yesterday's
PPI.
big.
Yeah, we got PPI. August PPI. We're getting CPI tomorrow, I believe.
Yeah, it is.
August PPI, producer price index, came in down 1/10, right? That's
Wholesale
another
inflation.
Nice feather in the cap of the rate cutters. Prior was revised down to just a plus 0.7 from a plus 0.9. So ultimately, the producer side is not reflecting the angst around tariffs. And that's actually where it would show up first before it translated over to the consumer side. So it went.
Well,
really
let's put a little caveat into that comment. That was a big controversy when this report came out this morning. And many are saying, we'll know better tomorrow if that's true when we get the CPI cycle.
Are they passing it through?
Yeah. Are the retailers passing it through, which it doesn't appear to be at this point, but we'll know tomorrow, or are they absorbing it, so on and so forth. So I just want to throw that little.
And you've heard both, right? You've heard some companies say they're eating it, others say if they haven't started to pass it on, they're going to. Walmart talked about it specifically. Right. So obviously companies are going to be fairly opaque on what their strategy is. We're going to jack all of it up to you, 25%. Right? Exactly. But in some cases, the country itself is eating some of the costs, lowering their prices, et cetera. So it's doing all sorts of things. And then will the government allow it to go through with the courts that are pushing back and forth? Obviously will be nice and exciting as well. But yeah, PPI would be the big one. Weekly mortgage applications grew at 9.2%. Nice. That's a good number. Clearly rates coming down. I got an email the other day from a bank just being like, hey, if you have a mortgage, it could be lower by X, Y, and Z. So they're all starting to start picking away. Yeah, I haven't seen it for a while for sure. So.
Definitely. Yeah, 0.1% month over month decline on PPI. They're expecting 0.3%. And then we get to the year over year up 2.6%. Expectation was about 3.5%. So overall, a great number. But again, if you're wondering why the Dow lost 220, NASDAQ a small gain of 6, and the S&P small gain of 19. But hey, by the way, record-setting day for the S&P and the NASDAQ. It was Salesforce that was under pressure, down a little over $9. Amazon, which I think Amazon was in just my conclusion, Jason, is lost a little over $7 on Amazon. I think that was related to the Oracle situation because they got the business, Oracle meaning, and Amazon didn't. And then Apple, when I was on the stock update yesterday, Jake was filling in for Ross, and he says, "Hey, traditionally, how does Apple perform after a big investors or a web conference type thing like they do?" And no, the numbers are actually goes up on average. I went back, the numbers are actually pretty good, not huge numbers, but boy, it didn't happen today. I mean, like I said, stock lost a little over $7 or so. And yeah, a little bit of,
I didn't say AI enough times.
Probably not. Yeah, you're probably right. There's something in there, or I don't know about you, but I'm not going to go spend another, $1,000 plus on the iPhone 17 because it's thinner and it's got a better, a stronger case. I don't care. I don't go out and drop my phone. I have a case, and
right.
Do I really care if it's, this thick or this thin? I'm not going to do it, but
it's awesome when you take your case off. It feels like amazing.
Yeah.
It's so thin, and then I throw a big old case on it.
Yeah, exactly. All right. Well, when we come back, let's get to our topic. How does a backdoor Roth work? We're going to educate you on that. But first, let's turn it over to Jack Saban. He's got news, traffic, and weather. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. Once again, we lost 220 on the Dow. The Nasdaq rose 7. The S&P higher by 19. All right, we're going to get into our topic. How does a backdoor Roth IRA work? But first, as we promised you, we did do a little research at the break in regards to Peter Thiel, right? One of the, probably one of the, if not the biggest, at least in my mind, he is the biggest success stories of a Roth IRA that started with next to nothing and became a whole bunch of money. So we got the data. So between 1999 and the year 2021, Mr. Thiel grew his Roth IRA from $2,000 to $5 billion. So I was way off on the growth side. $5 billion, 2000 to 5 billion, 100% tax free. And how did he do it? He bought like 1.5 million shares of PayPal when it was like worth 0.0001, like probably less than a fraction of or about a fraction of a penny. But we all know what happened with PayPal, right? It ended up getting bought and so on and so forth. And so now, at least as of this writing, he was, his Roth IRA was worth about 5 billion. And so Jason, you take a guy like that, assuming, he doesn't sell any stock for capital gains, he'll probably never pay the government another dime, because all he's got to do is just take a little bit of money out, a few million here, a few million there from his Roth and never pay a dime of tax. And so that's what we're
I
going to
thought
teach
he
all
had
of you to do.
converted way more. I was wrong. That's insane.
Yeah, no, it's a classic story, and that's folks kind of, believe it or not, that's kind of where this whole backdoor Roth IRA got started. So once again, if you just joined us, what we're going to show you is how to fund a Roth IRA if you are over the income limits, which we will go over with you, that would normally prohibit you from owning a Roth IRA. We've got a lot of points. We're going to get started right here. Let's start off on the eligibility side. So like Jason was mentioning earlier, let's go through the actual hard numbers. If you are single and you make more than $146,000, you can't put any money into a Roth IRA. If you are married and you make 230 more, you can't put money into a Roth IRA, you or your spouse. So sounds like a lot of money, but in reality, it's really not, right? When you start factoring everything in, that makes a lot of people ineligible for the Roth. And so many feel like, well, wait a minute here. That's not fair. Well, that's just the way the rules are at this point. Now, Jason, before we go on to the next one, you brought up an excellent point. And I want you to reiterate it, give you all the credit, that no matter how much money you make, you can fund a traditional IRA.
Yeah, the contribution limits are based on age. So 7,000 for under 50 and 8,000 if you're over. But it's a question, sort of as John's pointing out, is it deductible? Right? So yes, I can contribute to a traditional IRA. I can put $7,000 into it if I'm 45 years old, but if I make $400,000 a year, I can't deduct that contribution, which means it's technically after tax money. Because remember, when you put money into an IRA, it's coming out of your wallet. It's not coming out in your pre-tax in your paycheck. It is you writing a check, and I'm just keeping it simplistic, and depositing it into your traditional IRA account. And at the end of the year, your TurboTax or your CPA says, "Did you contribute to a traditional IRA?" "Oh, yes, I did, 7,000. "Okay, well, your income is X. You can't deduct that contribution, so it is after tax money. It will still grow tax free until you go to take it out. And inside of that account, you're going to have a $7,000 basis, which means if it's now $100,000 and you liquidate the whole account, you've got $93,000 of income and $7,000 of your own money back. Long-winded, but ultimately you can do it. It just doesn't really give you all the benefits that a Roth does because you don't want to pay taxes on any of it. It's just that doesn't get you there. Your basis is there, but you still owe on all the gains. In this case, if you do a backdoor Roth, you don't owe any money on the gains.
Right.
You just pay a little bit of tax now on your contribution.
So why? I mean, you're paying tax on the contribution going into the traditional, but getting no tax deduction. And you're going to pay tax when you go to take it out. Where with the Roth, backdoor Roth, you're putting money in that you've already paid tax on. So now we're apples to apples, but we're not going to pay any tax when we go to take the money out in retirement. And let's muddy the waters, which we're not going to get into because we can spend a whole show on this. And that is the deductibility of the traditional IRA. Also, not only do you have income limitation, but also if you participate or even have a 401k or similar type plan offered to you through your employer, a lot of people don't know this, you lose your deductibility of the traditional IRA. So there's, like I said, just a ton of rules on that. But let's stick to our topic, the backdoor Roth. Okay, so just remember, 146 single, 230 or more married, you can't contribute to the Roth IRA. Same contribution limits as Jason just eloquently mentioned: 7,000 if you're under 50, and 8,000 a year if you're 50 or older, and that goes for you and your spouse. Now, let's move on to the conversion side of things, because this is where it starts to get real interesting. So, okay, sounds great, John. I'd love to have a pile of tax-free money when it comes to retirement. So how the heck do I do that? So here's the strategy, folks. Here's the strategy. Ready? Here we go. First thing you're going to do is you're going to open a traditional IRA. Now, you're going to find out later. Hopefully we have time to get to it, but you're going to find out later. Don't commingle this with your existing IRA. And we're going to get into the tax rules as to why.
We create what's called a conduit account, just to give you a term.
Nice term. Like, good. Thank you. Glad you threw that out there. Okay. So you're going to create this brand new, fresh IRA, no matter whether you have an IRA now or not. Start a fresh one. Okay. So now you're going to put your, let's say you're over 50 years old. Let's say you're 55. You're going to put your $8,000 into this newly created traditional IRA account. You're then going to have us or another firm immediately create a Roth IRA. And then, as Jason said, it's going to become a conduit. In other words, you're going to convert that traditional, that 8,000 you just put in, you're going to convert it to the Roth IRA. Now, always, always, always make sure your tax professional is aware when you're going to look at doing a backdoor Roth. Why? Because we don't want you to bump up into a higher tax bracket and for some other reason, but always huddle up with them before. Okay, but when you convert that 8,000, that's going to be reported as taxable income. Remember, you're putting the money in the traditional, you didn't get a tax deduction, you're funding it with after tax, you're funding it with the money. It's going to become a taxable event to you. So you're going to get a 1099 at the end of the year if you got the tax deduction going in. If you're just funding it with after tax dollars, then the idea is don't let the money grow, right? So let me clarify that. I did a bad job explaining that. Pre-tax money where you took the tax write-off with an existing IRA, all right, great. It's going to be taxable to you. That 8,000 will be taxable. You get a 1099. But if you do what we're saying, start a brand new start a brand new traditional IRA, fund it with the 8,000. You've already paid tax on it. You're getting no tax deduction. Then turn it over through the conduit and convert it to the Roth IRA. The key is do not invest that $8,000, right, Jason? Don't put it in and go, hey, 6 months from now, I'm going to go buy Oracle. And 6 months from now, your 8,000 is turned into 20,000 because now you just created a taxable event. We don't want you to have to pay taxes. Put the 8,000 in, put it in the money market portion of the traditional IRA. Do the conversion. Your 8,000 you put in should still be worth 8,000 because it's just been a money market when it goes into the Roth IRA. That is the fundamental aspect of the backdoor Roth conversion. You're just converting money in a traditional IRA into a Roth IRA, and then it can start to grow. Now, when we come back from this break, we're going to touch on, again, a big tax issue that you need to be extremely well aware of. And hopefully, you, like I said, get your CPA involved in this whole thing. But if you do your own taxes, we're going to educate you on this side of it. Anything you want to wrap up with on that portion, Jay?
No, I think it's spot on. It normally happens hand in hand. You're going to contribute to the traditional IRA. We just make it a cash target for the portfolio, and then immediately you're signing a Roth conversion, and then it converts over into your new Roth. The conduit IRA sits with no money in it. You leave it open into the future, and now you've just moved $8,000 to your Roth account, and we just get it invested as we would based on your risk and goals, and you're off to the races.
There you go. I love it. All right. But now, like I said, there's a little tax rule, not a little one, actually a big one. I'm saying that facetiously, that you absolutely need to be aware of. We'll tell you what that is when we come back on our subject. How does a backdoor Roth work? Let's turn it over to Jack Saban. He's going to wrap things up in the Right Now Traffic Center. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. Once again, we finished down 220 on the Dow. NASDAQ rose 7 and the S&P higher by 19, but again, record finish for the NASDAQ and the S&P. All right, our topic, how does a backdoor Roth IRA work? So once again, this is for those of you that are not eligible to contribute to a Roth IRA because you make too much money. Once again, to go over those numbers, if you are single and you make $146,000 or more, you can't contribute to the Roth. If you are married, you can't, and you make more than $230,000, you can't contribute to the Roth. So how do we get money into the Roth if we make more than that amount of money? That's the backdoor Roth strategy that we're going over with you. So remember, just to reiterate one more time, how you do this, you open up a clean, don't use your existing, you're going to find out why. Don't use your existing IRA. And let's say you got $100,000 in your existing IRA and then you want to put in your 8,000 because you're over 50. Don't do that, right? Put in your 8,000 into a brand new IRA. We then convert that over into a Roth IRA, and You funded it with after-tax dollars, you moving it to the Roth. Now it doesn't matter how much money you make, you can do that backdoor Roth. So that 8,000, which normally, had you not heard today's topic, that 8,000 you put in your IRA, you didn't get a deduction, gross tax deferred, you pay taxes when the money comes out. With the Roth, backdoor Roth, same thing. You're putting money you've already paid taxes on into the IRA. You convert it immediately. That's the key. One more time. Don't let that money grow. As Jason said, they put it in the money market portion, and then that 8,000 you convert it immediately into the Roth. And now, no matter how much money you make, you can do the backdoor Roth strategy. But as with anything, you must understand tax rules. And once again, this is why you want to get your CPA involved and your financial advisor if you go to do this, because if you screw this one up, it could really, really cost you a whole bunch of money. So there is a little rule out there, and I say that tongue in cheek, a little rule out there that is called the pro rata rule. Now, you see what happens is the IRS doesn't allow you to pick and choose outside your traditional IRA what money you want to do. Like a lot of people have pre-tax money in their IRA, they have post-tax money into their IRA, so on and so forth. They don't allow you to do that. So they have a formula, and it's called the pro rata rule. And again, I've got to go quick here. So once again, reach out to us if you want to get more details. But essentially, this is a formula where you take the after-tax amount. So let's run the numbers, Jason. Let's just do a hypothetical real quickly here. Let's say, okay, so let's say you're under 50. Okay, so you put $7,000 after tax into your new traditional IRA. Okay, but let's say you have $93,000 already sitting in that IRA, in the old pre-tax IRA, right? So you got 93,000 of old money, you got 7,000 you just put in for a total of 100 grand. Well, the rule states that you have to look at your aggregate combined value of all of your IRAs. And if you are self-employed and you have SEPs and simples and some other things, you've got to include those. But bottom line is, you go back, you look at what the aggregate value of all your IRAs were as of December 31st. So that 100,000, once again, that we have, right? 93,000 of old money, 7,000 of new money. Now you decide, I want to convert that 7,000 I just put in. So the formula is you take 100,000, the aggregate value of your contribution and your existing value, divide it by 7,000, your new contribution, and that tells you what percentage of your backdoor Roth conversion is tax-free. So 7,000 divided by 100,000 is what? 7%. So that means only $490 is tax-free of that contribution you just made. $6,510 is taxable. Imagine if you have a very, very large IRA. I'm just using 100,000 as an example. If you had a very, very large IRA and you're going, hey, man, this is a great strategy that we heard about. Guess what? You're going to be shocked when you find out how much is really tax-free. So, Jason, that is, again, one of the biggest gotcha out there when it comes to the backdoor Roth, and hence why you need to work with someone that knows what they're doing on these things.
Absolutely. Absolutely.
All right. Now, we're going to kind of wrap things up with some strategies to avoid the trap. So roll the pre-tax IRA funds into a 401k. This is another strategy we're out of time to share with, but this is another way that we kind of get around this pro rata trap. Convert larger amounts. Sometimes you want to convert larger amounts all at once if you're in a low tax bracket year because your income is down. And Jason, you were just talking about this personally. You got to track your bases carefully, and that's IRS Form 8606. So
exactly.
A lot of rules
That'll
there.
give you all that color of what's non-deductible versus deductible from historical inside the account.
You got it. Next week, we're going to talk about a super backdoor Roth conversion, how that one works. God bless. Have a great afternoon. We'll see you tomorrow on the Jon Sanchez Show.